P Money the Great strikes again.
Hey, how you doing?
And I'm doing pretty good, bro. I cannot complain. How about yourself?
I'm good, bro. I'm good. Ooh, just gas for air. I just did some push-ups. I do 100 a day. So I do 100 every morning, but I still work out every day, Monday through Thursday.
Let's go. Have you seen those memes where it'd be like every time your trade hits a stop loss, you do a push-up, and the guy
I haven't seen that one.
And then the guy's like super buff. And they're like, how it happened? He said, I took a lot of losses.
Nah. It's a lot of memes with this, man. When I first got into into trading, it's so funny. The meme page with trading, like, it's so funny.
Bro, it'd be hilarious. So I gotta find that one.
That's crazy, man. I seen I'm on page 14 on what you sent me. It's pretty nice. It's pretty nice.
I don't have it for trading, but I'm gonna send this to you. I'm gonna send this to you on Discord, man. It is hilarious. It is hilarious. Yeah, man. I put that together the other day.
How do you get like that? I mean, every time. Yeah. These memes is crazy.
It's crazy.
It's just trade. It don't work out. Yeah, I have a question on GU.
Okay, let's take a look at it, bro.
I can you gonna do your screen or my screen?
I'll let you do on your screen. Go
Okay.
ahead. Fire away.
Let me see something. Let's see. Okay. Can you see it?
Mm-hmm.
Okay. So, okay. Okay. So, my daily bias yesterday was buys.
Mm-hmm.
It was buys. I know my demand zone goes down here, but it's okay. I just do it. Okay, so it was buys yesterday, and this candle, obviously, this is a full day, but this candle was something like, this candle was looking, it was still green a little bit, but it was like, it had no body. It was like this, but like it was looking like this, but obviously green. So okay, so then, but when I woke up, it was I was thinking it was buys. Well, and it was buys, but I got miscouraged. I don't know why. So okay, so daily market structure is bullish, and 1 hour market structure is bullish. Higher high, higher low, higher high. So this is when I'm like, okay, I'll say, what did I do? I think I went on a 15. I think I went on a 15. Okay. So there's a change of character right here, right?
No, it's not.
So because I was thinking like higher, well, just like internal order flow, higher, low, lower, high.
You look at that internal order flow, it's going to get you thrown off every time. There's that. Everybody has their own view of how they look at it.
Mm-hmm.
So I saw the homework that Solomon has you do, had you look at internal order flow. But I'm going to tell you, for my style, no, I don't even look at I'm not looking at the internal order flow, because that's going to get you messed up, right? Because yes, technically there are demands and supplies in there, but the market can do whatever it wants to do. It's not, when the market does like this, right? And it does all of this, right? Ooh, that was ugly. Mm-hmm. Oh yeah, I haven't finished. My bad. So when it makes this BOS, then these demand zones are really technically valid, right? Mm-hmm. But when you're in the middle of this, when you're in the middle of all of this, right? Mm-hmm. Technically, they're not valid yet, because you try playing off of this demand and instantly price goes through it like this. And now you have a BOS. I mean, a change of character right here. So now technically all these supplies are valid. Mm-hmm. Like, it's a tricky thing to play off of internal structure. That's not very high probability.
Okay.
So like, it's very risky, let's put it like that. The only zones that I would be looking at if I were you at this point would be this, right? Something down here, something all in this. This is where you get in your demand. So if it taps one of these, oh, I'm going to take it all day. If it creates something like this, I'm going to be a little bit more skeptical, because then I'm really going to need more confirmation that price ain't going to do something like this. Mm-hmm. Okay. Like, internal structure is not your friend, really. So,
all right. Well, now I know you wouldn't take the trade. Let me show you my thought process. You already know internal. That's what I was thinking. So, okay. So I was thinking, what time is this? 3:45. Okay. So 4. Okay. So I was thinking like this broke. Mm-hmm. I was thinking like, okay, this made a new high. Internally, I know that's horrible. You wouldn't do it. Let's go to 5.
Well, let's put it like this. You can do it. It's just a question, like, everything you're gonna ever ask me, mm-hmm. It's gonna be, yeah, you can do it, but is it worth it?
Exactly.
Like, that's the question I always ask myself. Is it worth it? Is this something that, if this was the last dollar and I had to take this trade, would I do this?
Exactly. You will feel more comfortable with your last dollar right here.
Yeah. Like, you have to, like, some people are okay with taking more losses because they make it up in big wins. That's cool, but that's not my mentality, because I'm not built like that. I don't want to sit there and take loss after loss, last loss or loss before I get it. And I know statistically it doesn't play out. Like, this just doesn't play out in my favor most times. So that's why I'll be like, nah.
Your standard is a no.
Mm-hmm.
So this is what I was thinking. I don't think this is what I was thinking. So this broke all the highs. No, this broke all like the lows. This is all like liquidity for me, and it broke it. So I'm thinking like, okay, this is a major structural break. So I was thinking like, okay, so then I'm thinking like, okay, I can run it from right here, and I can take a buy right here. But I guess I just took it too early, because by looking at this, what will be your demand zone? This whole thing in here, I know you don't trade like this, but by looking at this, would you pull a demand zone in here?
No.
This wouldn't be considered demand zone in here?
No, because this indicator is not right, bro. Like you're
Which
saying,
indicator?
the one that you have on, that's the fractal one. That's
Well,
none of that's correct. So you had demand.
I'm really worried about this one. I don't really
here.
care about this one like that.
Yeah, but your demand was right here. If you were going to enter in a trade, this is where you should have entered.
Okay. I'm all right. I'm okay. So this is my last demand zone.
That was a demand. That's the last significant one that followed
When that made
structure.
this.
You had a continuation opportunity right here when it BOS, and you could have taken either one of these two up. That's the after
Well,
that.
this isn't my time. This isn't my time. I'm right here.
No, you don't have demand that you could use. Not high probability.
Yeah. So I'm asking, is this this big old green line? I'm thinking, can all this be a demand zone?
Not a high probability one, no.
Okay, not a high pro. Because I was thinking like this, this broke structure and it came up and now it's come back in my demand zone.
But that's what I'm saying. That whole indicator is wrong. That didn't even break structure. Structure was broken a long time ago. Structure was broken down here and down here and then down here. And it kept making this is a structure break, this is a structure break, and then it broke, and now it's showing that it's going bearish. So you have no reason to be looking for a demand at this point. Like it's showing its hand that it's going downward.
Yeah, and then I believe I bought like right here. Yeah, I think I bought like right here.
Yeah. That was going against the order flow.
Yeah, I it was horrible. And then bam.
Yep.
And then so then I'm like, okay. Then after the fact, I started thinking this. So because from my point of view, I'm thinking like anything in here is a demand zone. But yeah, I know you're not saying it is. I was thinking like, lower low, lower high, lower low, lower lower. Let me see. Lower low, lower high. This is like an even right here. And then I'm thinking like it changed character because it broke all this. And then prices just coming back down here and it's going to go. That's what I ended up doing, but I know it's not high probability. But that's what price ended up doing. And then price took control, and then that's what they ended up doing.
Yeah, but that's what I'm saying, bro. Like these indicators, they've got you all thrown off, man. Because you think that you're looking at market structure. That structure ain't even right. It's not even close to right. And you look, it has you looking at the market wrong. That's the problem.
Well, I really use it. I really just use it off of. I was really worried about this one. Now I feel like this one made me think that this is all demand down here. Like all
And
this
that's my point. You're using it thinking that it's demand. It's wrong, and it's not showing you structure. And you're now taking losses off of something that you can't see.
So you wouldn't have taken this trade?
No, not in the least bit.
Exactly. And the night before, I'm like, okay, I know G is gonna be biased tomorrow, but then I just woke up. I was expecting it to come in here, it just never came. And I seen it doing this. I'm like, oh yeah, it's some liquidity, but yeah, it's not just down.
No, like it just there was nothing high probability about that. You could have taken that and you would have taken hits just to get it, because the market structure was wrong. So you're reading the market wrong. If you read market structure wrong, you're going to get on the losing side of trades. You had a chance. It was just beforehand. And if you had read the market structure right, you would have seen, oh, okay, I could have waited. Because go back to what happened. No, this is fine. Well, go ahead and play for it. I'm going to show you where it actually was correct. All right, go ahead and go forward. This right here was where it made, oh, you can't see my annotations. This is right here where it made a chalk higher. If you would have taken this, you would have taken a loss still, but this would have been your first buy. So it depends on what kind of confirmation you use for entry. If you use limit order, you would have taken a loss. If you use market execution, depending on your criteria. Now keep going.
I would have never I know I would have never taken this red strength coming in like that.
Well, then you would have avoided that one. So let's go on. Let's look at the next one.
I want a 3-minute. That's what I like now.
Okay. So keep going. Keep going. Yeah, you can go faster because it's going to take a while. This is your low. Yeah, you can keep going. It's going to take a while. Okay, now we just had a break. This is your high. When it breaks this, keep going.
Okay, where is the break? You said right here? Nothing broke with bodies.
No, I said it's going to break.
Oh, okay.
All right, this one breaks. Cool. Now you have a demand. So if it comes off of this, you could take this as a buy.
Yep, demand, and then
because all of this demand that you think that's over here, none of that's relevant at this point.
Okay.
You're literally going against the trend and trying to think that price is going to buy, and all you were doing was catching a falling knife. Now this, I could have bought this. It still wasn't touching into your demand, but if you wanted the first spot where you would look for entry, it would be this. It just doesn't meet that it would tap anywhere into this demand. So
okay. Yeah. Okay. Yeah. So I was thinking like all this was a demand because of this right here. So, yeah. I blew it. Yeah.
just understanding when the market's showing your hand. The market's showing what direction it wants to go. But if you don't have the right market structure markings, you can't tell that. You just end up taking losses.
Yeah, I mean, I shouldn't have took this. I took this one too early. Where was it? Right here. This supply was. When I take it more alone. Yeah. Just because you have a little break, that doesn't necessarily mean, it's just because you have like a little break, that doesn't mean it changed character all the time, huh?
It depends on where. You have to look at the structure. When you look at all this internal structure, it'll blow your mind on what direction anything is going. And you'll start making all kinds of mistakes when it comes to trading. Like it never fails. Like I got away from internal structure because one, it moves so much, and two, you just, like I said, taking bad trades.
Oh, my bad. It was really right here. Yeah. Facts. Oh, okay, that's what I wanted to show you. Yeah, see, I was going against the trend. This was the last supply right here.
Yeah, you have to be able to read it. That's what I'm saying. These indicators that you're using, they're not helping you. They're just
these ones right here.
Yeah, they keep throwing you off because for the last 2 months, most of your losses have come from just reading that. They literally, because you're like, oh, well, I thought this. I'm like, that's not even a higher high. And like, well, it's like, well, the indicator says that. I'm like, yeah, the indicator's lying to you. That's why you have to see it without the indicator. Because your eyes don't even, like, you thought that this was a higher high, right? Go back. This is why you have to see it without. You thought this was a higher high. You had already made a break right here. You said when it broke this green line, you thought this was demand because of this break. That's not even a higher high. You had a lower low here. It had already gone down. It had already gone up. That this line is insignificant.
Mm-hmm.
And that's what I'm saying. The indicator is literally throwing you off and making you think things are there that are not there. But if you can't see that with your eyes, you're just going to believe what the indicator says. The indicators are only as good as they are coded. Somebody made it. This works for somebody else's system. But if you don't understand like the intentionality behind everything on that indicator, just using the indicator by itself is going to do nothing more than blow your account because you're going to misread it every time. Like you have to really know how they built it. What are the rules behind that indicator? Why does it even think that this break is important? Why did it not think that this lower low break was important? Mm-hmm. Why did it create this lower high here and this higher low here, which according to our rules are nothing? None of these points really exist.
Mm-hmm. Yeah, it's like eternal structure.
It shouldn't even be a higher lower or lower high there. But that's why I say you have to understand the rules behind it. You don't just turn on an indicator just because you see somebody else use it. Like actually understand what are the rules and what does it do? Because if you don't know it, turn it off, delete it. It's just wasting your time on the chart. Mm-hmm. Like that literally caused you to take a loss. Got it. That's why I'm saying, that's why I've always said is that the indicator is not even, it's not serving you at all. Like it's not helping you. It's only giving you confusion and making you think things are there that don't even exist. Yeah. I look at it sometimes like, yeah, that's pretty much it. I took a trade today on Nas. Leave. A trade on Nas. I hope you sold today, I'm about to say. Yeah. All the indices did was drop today. Yeah, I sold. I was I was just chilling all day because it was looking kind of slow. But my bias was already sales. I had a supply zone right here, and I had one right here. This tanked. It went. I guess it went. Now it's like to go to the extreme. So I was hoping it went up here, but it didn't. But so this tanked, and price ended up coming back. So so price ended up. So this obviously this became a supply zone. Yeah, this became a supply zone. I knew that already. So price went down here. So I did like a little, I did this like a little demand zone right here. I'd say like, okay, because I know I know this was coming down and I know this was retesting. So I said, okay, this is like a little demand zone. This is my thought process. This right here is a little demand zone right here. And I wanted it to be a flip zone because I know price is going to come down. So I want to see if the demands will hold. So this is one, it gave one, then it came back in here, and then it did like a reversal pattern. So I took my first sale. I disregarded the flip zone right here, but I took my first sale right here because I know this is a supply zone in here above this blue line. Took my first sale in here. Price came back, and I believe it wasn't going to break me even, but I just got out because
I got in right here, so the price wasn't going to break me even. I guess by little pips. I don't know. Maybe spread would have took me out. So I seen, but then I kept this right here. So this flip zone, I ended up taking a sell right here because I know this demand that gave this one became a supply zone, a flip zone. So I ended up taking this trade, and I ended up winning. I ended up winning this trade, but I got out early because I didn't know how far it was going to drop. I got out early. I probably got like right here, and for like 4R. I just got up a little bit earlier. Oops, oh, that's weird. Okay, but I got out like right here. I'm sorry. Like right here. Any objection to this trade?
Once again, it went against structure. It just luckily worked out for you.
How did this go against structure? And I took it right here.
Once again, the indicator fails you. Break, 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 break. So now you have this. You can't see this yet. And you had a chalk to the high. Now, had it not gone down, you could have actually had price do, it did this and then went down, luckily. But you could have had it go up from right here. So you took another little probability setup. It could have reversed on you.
I could have had price go. Can you
from right here? It could have gone up. So.
Oh yeah, it could have gone up. And I see this, and I put it as a little demand, and it failed. And that's when it broke. And that's when it broke this small demand zone.
Yeah, but you're far away from your supply. So it literally came into the supply, came away, and then chalked up. But the supply is up here, and you're taking a chalk over here. So this move could have actually came back in the supply.
Oh, this is now supply now. I just didn't draw it. This right here. This was the original supply when I woke up, and then this created a new supply.
Mm.
Yeah, I can delete the blue line. This created a new supply.
Still wouldn't have taken that in through.
Yeah,
because it wasn't exactly the highest probability, even though this was a supply.
Mm-hmm.
Price didn't ever price. Well, go back. Draw the supply.
Draw the real supply.
Yeah.
The one that it made. Okay, and I have the 3 and the 5 on, so just bear with me.
Mm-hmm.
I use it for personal purposes. 3 and the 5. This is now the supply zone. Did you want me to change time frame?
Yeah. Go down to wherever your entry was.
Mm-hmm. And then so price tapped in my supply. I put my blue, it was just like blue, it was a blue line right here, but I knew this was supply. So price tapped in my supply. And yeah, this is the demand that gave it the tap, and then this demand ended up failing. And then so I took my trade right here.
Yeah, I wouldn't have still taken that, but it did work out in your favor.
Because I see you sometimes, like I see you sometimes in 1 15-minute candle, that will leave and you'll be taking a trade inside a 15-minute candle. I guess this one's not the case, but I've seen you do that before. Like inside a 15-minute candle, you'll be taking like a 15-second trade coming out of the 15-minute candle.
Yeah, but it has to follow structure.
Mm-hmm.
Your trade didn't follow a high probability structure. There's only two types of entries that you take: continuation, reversal. It was what you took was neither.
Mm.
That's why I say it's low probability. It worked out for you, but it wouldn't be. It's not something that's tied to an entry model.
Yeah. So what will be an entry model? Can you draw it by this being supply right here? Can you draw what type of trade you would take? What do you want price to do for you?
Like I said, none of this follow structure principles. There's only two types of entries that you take. There's either reversal or you either take continuation entries or you take reversal entries. But this one did not come from something I would have treated as confirmed. You go from making a lower low to a lower high to a lower low to a higher high to a lower low. I wouldn't have taken this.
Yeah, I just read it. I just read it and I seen it. Yeah, I just read it. I'm on page 14. Yeah. But yeah, I just read it. And then but by this being supply, you would take it if price came in here and did something like this, right? In here and chopped. Obviously, right?
Oh no. It has to follow structure. So
So you take it right here.
yes, that is the model. That's a reversal entry. But it made a leg up. It made a reversal. It starts making legs downwards.
Mm-hmm. And this can be where you drew it, or it has to be in here.
Say it again.
So I see where you drew this at. So would you take it as if like right here in this instance? Can it be right here, or does it have to be in here?
I'm not getting the difference in your question.
So like okay. So you're taking the trade at this point right here, like right here.
Mm-hmm.
Okay. Yeah, because this touched in and this did a breakaway, and then it already tapped in, so you're fine with taking the trade at this exact point, right?
Mm-hmm.
Got it. Okay, thank you. Yeah, got it here. Yeah, that's crazy because I just read that high probable thing that you just read it. Okay.
But yeah, so I mean, you got to remember you're following a model, man. Sometimes it works out, sometimes it doesn't. But like I said, when you're trading, you have to ask yourself, is this something that, like, for instance, if you're going to go across the street, right? Mm-hmm. And you see a bunch of cars coming, are you going to make a mad dash across the street?
No.
What if you had a butt naked girl there with $1 million and she was saying, come over. If you come over here, I'll give you the money. Would you run now?
No, I could still die.
Exactly. It's the risk. It doesn't matter what factors in it. It still changes that the risk is still there. So whenever you're looking at trading, what I'm getting at is that when you're looking at trading, right, mm-hmm. that worked out. Okay, it worked that time. But if I had to do that 100 times, would it work out 90%, 80%, even 50% of the time? No, it wouldn't. So it worked out in that occasion, but you have to be strict in knowing these are the times where it works, these are times are not. Now, if you had that same street and there were no cars in the road and there was somebody saying they're going to give you $1 million, would you make the mad dash? Why?
It's not a lot of risk.
It's not a lot of risk. So that's what you want to pay attention to. Your winners show you something. Your losers also show you something. I spend more time understanding the trades that I lose than I do spend the time the trades I win, because the trades that I lose tell me something that I'm considering where I'm not considering, oh, this is a risky situation. I don't perceive it as risk. Or where the winning trades will have the characteristics that are always consistent. The trades look the exact same. I guarantee it. Because in my winners, I know my winners are going to work 9 times out of 10. And when I lose, those are the 1 times out of 10 where I do something that's not in the 9 times out of 10. So I'm looking at those 1 times out of 10 to say, what is in here that is not in everything else? Like trading is really, after you spend enough hours with it, you realize it's just systematic. It really is.
How would I know? Because I like, obviously I got out early. How would I know? How would I know to get out? I mean, to stay in a trade or not? How would you? Obviously, if everything went with your plan and you see this thing dropping, how would you know to stay in or to get out?
It's criteria. Everything you do has to have a criteria, and you just have to make a criteria to know.
Yeah, mine was. I drew this line because this was this last daily low that nothing passed. But I can hear your voice now saying that this doesn't even matter because nothing made a new high. Is that correct? Or
Kinda. Nothing made a new high, right?
Yeah.
So if you want to play on this is nothing made a new high, right? But we're looking at the daily time frame. So we know it's going to pull into maybe something down here like a demand, right?
Exactly.
So if that's the case, then you know the direction that it's going is down. And at least if it passes here, is it continuing in direction? Well, then great. That's a great target. That's a smart target. But pinch this in over here where you have the price.
What do you want me to do?
Pull it down.
Like this?
Yeah, perfect. Now, I'm going to give you a new scenario. Price is right there. Are you going to put your target down here?
No.
Why?
There's no structure down here. There's no price reversal zone.
The last structure that you could even find or anything to the left is right here. So if you put it here, it could do that, but it's not very smart to do so if you want to collect the profits. Does that make sense?
That makes perfect sense. So that makes perfect sense. So was this even smart for me to even care about this line? This is the last low, it never passed.
Of course. I mean, it has to pass that in order to get to here. If you're thinking that's going to be your stopping point.
Yeah, but I thought this could have been my stopping point because this was the last. Nothing has passed this, nobody. But now I'm thinking, I'm like, damn, I don't think Brian would even care about this. I don't know, would you? Because this never made a new this zone down here never made a new high. It's never made a new high. It tried so many times, it still never made a new high.
It made a higher high here. And if you know market structure, it's going to go from this higher high to potentially this low. But if you zoom out real quickly, you've gone from a higher high to a lower low to a higher high, and you start with a lower low. So you're now in potential consolidate. You're in consolidation, which means this is the lowest point. This is the highest point, which means it might come somewhere even down here. So directionally at the moment, I don't know how far it'll go, but I'm just going to keep looking at everywhere it passes. But my direction is probably going down.
Yeah, I totally understand. So should I have was this line even valid?
Yeah.
Okay, it was valid because it's still like a PRZ, right?
Correct.
Okay, and I should have just played the line and see what it yeah, let's see on the fine. Okay. Okay, 15. Okay, so it passed. So once it passes this line, you're kind of like, because I know right here, this is not really. You be on a 1 minute. Let's see what it does on 1 minute. You would have stayed in here, huh?
Meaning,
Or no? All this consolidation.
depends. Probably not. No,
Yeah,
because one, you're taking trades during a market where it's doing where we're in times where we shouldn't be trading because it's just not high probability. So if you're gonna give me some profits, I'm gonna take it.
Exactly. Okay, that's what I was thinking too. I'm like, yeah, okay, that was good for me then. That's what I was thinking because I'm like, it's been consolidating. Yeah, I was like, it's been consolidating for a long time now. I mean, this is a nice risk to reward from here to here. So I just took my profit. And yeah, it went down, but but that's what I got to get rid of, my greed, and just, like, this was a logic place to create my TP, and it went to my logic place. So I gotta be satisfied with that.
You got to create logical TPs, man.
Yeah, that's
the market shows its hand. You just need to be able to read it. That's all. Don't do things that are outside what the market is showing. Like that's the most important thing. So, makes sense?
Yeah, that makes sense.
Cool. Well, I hate to run. I gotta jump to another call, but always, you got any questions, man, give me a shout. But tread carefully in this market.
Oh yeah, I'm getting my practice in demo. I'm just happy that I don't care. Like, I could be in the worst markets and I'm learning. It was like real estate. Like, I got in, like, my first real estate deal was like a short sale. Like, come on, like, it was horrible for me, but that was my hardest deal. So I'm getting coaching by you during the hardest times. So I'm okay with that because I know when good times come, I'm gonna kill it.
Exactly.
It's demo, so I'm not scared to fail.
Good.
All right, man. I appreciate you.
No problem, brother. I'll catch you on the flip side in this school.
All right, catch you.